Alec Walker with Crestmont Private Wealth, here to discuss a new service for clients of our firm that we are calling cash management. Given the rise in interest rates over the last 12 months, there's been some new options that have never been feasible before for us to offer to clients to get a slightly better yield on their cash that they may not be getting as good of a rate at their local bank. As you can see here, the chart to the left shows the increase in Treasury rates from 1 month all the way out to 30-year Treasury rates. And as the Fed has raised rates and the market is expecting more rate increases in the future, the current yield on these instruments have gone up. And right now we're kind of seeing the 1-year Treasury as the sweet spot, as it's currently yielding around 4%, while the 2-year yield is a little bit below that. So there is an opportunity cost for holding that cash for an additional year. And so really when we're talking about cash management, we're focused on the next 12 months and then reviewing periodically to see if there's been significant changes on yields and on interest rates. And so the strategic alternatives for cash that we can offer are first and foremost, prime money market funds at Charles Schwab are currently offering about a 2.24% current 7-day yield. And that's a little bit higher than even savings account that I would get at my Ally Bank account, which I've been pleased with over the last couple of years, but things have gotten a little bit more attractive at Charles Schwab. But then above and beyond that, we could actually go out and purchase individual treasury bonds for our clients anywhere from 3 months to a year. And those yields are, again, quite a bit higher than the money market. There are some pros and cons to the money market versus the treasury bonds. Treasury bonds can fluctuate with market rates, but as long as you hold that bond till maturity, you're going to get par value for it, along with potentially some semi-annual interest payments along the way. And then the third option would be CDs. The CD rates are similar to the treasury bond rates, but sometimes there can be a benefit to taking a CD versus a treasury bond. So what we can do and how this would work for our existing clients is we would create a custom cash management brokerage account, talk with you to figure out how much would you want to put into maybe a 1-year treasury bond. Maybe you want a couple months worth of emergency cash in the money market fund. It's a little bit more liquid, less volatile, and then maybe sprinkle in a 3 or 6 month treasury bond as well. And as those mature, we can revisit, does that cash need to be redeployed within the cash management account, or is there a better purpose for that cash outside of that strategy? These accounts are not subject to an advisory fee. This is a completely complimentary service for fee-paying clients. And then secondarily, you would have the option to connect a Charles Schwab checking account to this cash management account. Not required. You could connect it to your own personal bank account as well, but there are some benefits for convenience and quick transfers, as well as consolidation with all of your other investment accounts at Charles Schwab. And here's just a few of the benefits. I recently switched over to Charles Schwab for my family's complete banking needs. Comes with a debit card, checks, no ATM fees worldwide. We just took a trip out of the country and had no problems with our Charles Schwab Visa debit card. No foreign transaction fees, and even the checking account offers a pretty reasonable 0.25% interest rate on the checking balance. So if you have questions about that, please reach out to us. We'd be happy to walk you through the process of setting that up. Now, we want to be clear that cash management is not investment management. There is a risk in holding too much cash, and then there's a risk in saying, well, why don't I take some of my investments that have lost value and move them into these more conservative cash investments that are now providing a higher yield? Well, the reason we don't want to do that is that would be akin to market timing. If we sell out of stocks or bonds now, we lose out on the potential appreciation going forward. We may lock in a nice rate over the next 12 months, but 12 months from now, when that cash comes to maturity, interest rates could be significantly lower. And here's a couple examples of that looking back in history. So bonds are not dead. Yes, the price of bonds have fallen as rates have gone up, but generally during times of economic concern or falling interest rates, bonds can also provide price appreciation as well as interest payments. Now, here's a chart looking at the recession, 2008 to 2009. That green line is the Fed funds rate. So the Fed was decreasing interest rates during that time. The black line is the S&P 500. Obviously, it went down significantly during the recession. That 6.38%, that's the cash line. We actually did have some pretty decent cash returns. The 1 to 3 month Treasury bill index is indicating that there. But the Bloomberg US Bond Index, which has a mix of corporate and Treasury bonds, returned almost 20% over this 3-year period. And so that is the benefit of why we want to maintain bonds. You know, the Bloomberg Bond Index is down about 10% right now. If you were to get out of those investments and go to cash, you're realizing a 10% loss and missing out on potential gains in the future should we see a decrease in interest rates. Same story during 2020, during the pandemic. As stocks fell, as the Federal Reserve decreased interest rates, bonds did fluctuate slightly a little bit, but they provided returns above cash. And then as we've seen since 2020, you know, selling out of stocks now and going to cash, you're really going to potentially destroy wealth because stocks still have our long-term upside. S&P 500 is up 26% since January of 2020 and up 81% since those March 2020 lows. We are never going to see those kind of returns with cash-like investments. So simply what we're trying to do with the cash management service for clients is to look after your entire financial picture. We're currently maybe managing a portion of your investment profile. And if we can provide an additional service for no cost to help you get your fair share of interest rates and returns out there, then we want to be able to provide that for you. So give us a call. You can email us via info@crestmontpw.com or email me directly via alec@crestmontpw.com and talk about a potential cash management strategy for you. Thank you.